Okay, hey, so good afternoon, wherever you are. Welcome to Practice Acquisition during the time of COVID-19. My name is John Sheeley. I'm an enrolled agent. I'm on with Fred Stein, CPA EA. I have to get his designations correct because he wants CPA first. I
Sounds medical, sir.
I won't address that. So we did a webinar with Debbie Snelling from North Georgia Tax Services, and that's still available on the Tax Practice Pro YouTube channel for free if you want to go watch that after this. But we had a pretty good conversation, I think, where we talked about practice acquisition, and I had emailed Fred and said, there's so many new issues that are going to happen now related to COVID-19, and we thought that there was enough kind of to rerun this. So the paperwork you'll see in the handouts are forms that Fred has been using for practice acquisition, practice purchasing. Some of the things he does, I think, are closer to a merger, but that's all in there. And there's an article I wrote that's getting too old. I'm going to stop handing it out, but I wrote an article in 2014 that was in the NATP journal, so I gave you that as well to take a look at. So, Fred, you have anything in the pipeline for this year?
I was told that if I get anything in the pipeline during actual tax season, I might not make it through tax season. So,
but it's after April 15th.
So Tiani's in here yet. We got a few things that we're looking at that we want to find. So yeah.
So let's talk in a general perspective. How are you finding deals? How are you finding people?
A lot of them come from word of mouth. We've gotten to the point now where a lot of people know on Facebook that we are looking to buy practices and firms and take referrals. We think of referrals as practice purchases as well. So we also do monitor some of the brokerage sites. I don't like to use brokers, but I do monitor them. And if there is something that looks really good, I've had contacts. We haven't done any deals yet through a broker, but we talk to them.
Got it. Yeah, I find everything that looks good on a broker's site was already sold.
Yes.
Or even if it doesn't say sold on it, you reach out to them for the information, and they're like, "Oh, that practice, we just went under contract." And I think, how convenient.
Yes.
NATP has a listing as well. If you're a member, you can go into their classified listings on the website, and you can see by state where there are things for sale. All right. So then, what's the next step? So first of all, I think the purchase of a practice is the best use of your money. It's better than any advertising you can ever do, because whatever money you spend on a practice, you're going to get 100. If it's properly priced, you're going to get 100 cents on the dollar return each and every year from that practice, because those clients will keep coming back, and maybe you get even referrals from the referral. So I do think it's the best thing you can do.
I can't disagree there at all.
So what's the next step? Someone calls you up and says, "Fred, I hear you buy tax practices, and I want to retire tomorrow and be rich. So how can I separate Fred from his money?"
Well, it's a total interview process. It's like hiring an employee as well. Is you go through all the things that you're looking for, and you need to figure out what it is the seller wants to do first. And you got to make sure that what the seller wants is going to fit in with what you want as well. Does the seller want to stay on, or does the seller want to just unload and go away? Either way works, but they each have different benefits and issues that are associated with that. Right? If the seller wants to stay, you need to make sure that, and I'm going to use John's words this time, that they fit into your company's culture. Okay.
Right.
Last time I said you have to like them. I'm not supposed to say that. So we got to fit into the culture of the organization you're bringing them into, and make sure that most importantly is that if you're bringing the owner on and they're going to stay on, that they're going to be able to accept the changes that are going to occur. All right. When we buy a practice, we try to keep things as close to what the old owner did as possible. But there are certain things, especially on the admin side, that need to be done our way. Otherwise, Tiani gets angry, and we don't like Tiani being angry.
Well, I'm a Marcus Lemonis fan, although A lot of people apparently are not, based on some of the feedback I get when I say, and that means I'm 100% in charge. But Marcus would tell you people, process, and PPP, right? People, process, and product. Well, in our case, it's a service, but that's our product. And the process is super important, and not from a standpoint of mine is better than yours, but from the standpoint of standardization, right? If it's not standardized, you can't have Roseville does it one way, Cobleskill does it another way, at least eventually. And
Correct.
someone does agree with me, Marcus is fire. So the next, and your comment about like for a minute, that is the right comment, because you need to like them, they need to like you. And quite honestly, if you don't like them, birds of a feather flock together. You may not like their clients, and there's something to be said about the importance of liking the clients.
Yes.
So let's assume then, Fred, that I like you, you like me. You're good. What's the next step to buy my business?
Okay, well, we're going to do an evaluation of your business. We're going to ask you for a few things that we need to do our due diligence on. All right, we're going to want to see your tax returns in relation to your tax practice. We're going to want to see your profit and loss statements for the past few years. We're going to want to see a listing of your clients, whether they have names on them or not. If Tiani was actually here with us, she could have stated that instead of typing that, John.
I know.
Yeah.
But she doesn't like me is the problem. She's not my Facebook friend. It's okay.
So we're going to want to do diligence. And one of the handouts that you have is an Excel spreadsheet, and that requests the items that we want from the seller. We want to know what type of clients they have. We want to know the age of the clients. We want to know what type of schedules they have within the tax return, along with the fees and how long they've been a client.
Why does age matter, Fred? Age of client?
Because it's going to tell you possibly how long you have them for. A practice full of 70-plus-year-old individuals, that's not a 30-year practice.
Right. Certainly, when you look at valuing things, and we're going to talk about that in a minute, there's got to be some push down on the value of the business based on, my opinion, based on age of clients and based on there we go. The type of return.
Yes.
Right. So all of a sudden under TCJA, what I used to call the homeowner return, the Schedule A return, is a W-2 return. It really is. The guy with two W-2s and the homeowner are basically the same return in a lot of cases. But okay, so then you've collected my data. What do you want to do with my data once you have it?
Well, we are going to stratify it by various scenarios. You want to see, by return type, by age, by location. Also, very important is how they get us that information. What type of clients are they? Are they used to walking in and sitting down with an appointment and walking out with the return? We want to know how many can use client portals, how many submit through email, fax, other than walking in. So then we want to separate the practice by the walk-ins versus that, because we need to evaluate whether we can move that office or whether we need to incur expenses and keep that office if they have actually a physical location. So all of that factors into what we want to do. One of the things you want to look at, as we stated, is the current location essential? Whether they have walk-ins or not, whether they're used for client portals, people still need a physical place to go at times, and people still want that. And we're kind of a hybrid. You'll see people pushing 100% virtual firms, and people that don't like virtual firms want all in person. We're a hybrid. We see value in having a physical location from a couple of standpoints. Sometimes it's good to have employees and workers go to a place so they can build community there, as opposed to being everything remote and every by yourself. Clients like it. If it's an office that's in a place where you can get walk-in traffic and you get a presence in an area, that brings in more clients as well.
And you're not afraid to. So a couple of thoughts there about the space. That's part of a deal. Sometimes there's already an office space, whether you need it or not. And I'm thinking Roseville, right? You bought a second location. That's how far away?
Well, it's 40 minutes from where I live. So I do a commute every day there.
No, the
And
two offices. You have two. Don't you have two locations?
Roseville and Citrus Heights, yes.
Yeah, right. Which is how far away?
Oh, they're about 10 minutes apart from each other.
Okay.
So we're actually going through the process and evaluation of deciding whether to actually close the Roseville office. Right.
So California, like the rest of the world, we talk about miles. California, you talk about time. 10 minutes is around the corner.
It's about 6 miles away.
Got it. But yeah, so I mean that's a consideration is, do I have to take the location? But then two, if consolidation makes sense, which one can I get rid of and what am I going to lose to do that?
Exactly. And one of them is the Roseville office is the high rent district, and Citrus Heights is kind of more of the blue collar type area, a lot cheaper rent. And the good thing is most of the Roseville clients, a lot of them have converted to virtual. So we evaluate the number of appointments we get at each location, and then we put that into a cost per contact. You know,
Right.
how much does it cost every time a client comes into the office? And that's a factor when you're looking at overhead.
Just as an aside, I do that analysis every year here. How many people are still coming in and whether we should close the office and be all virtual. And the only thing that's really stopped me is that I don't have a Regis or a WeWork right near here.
Oh.
And the only thing that's remotely close to that, to a co-working place, is owned by an accounting firm. So I'm always nervous that, we're not there that day and, we can help you.
Mm-hmm.
So, but all right. So then the next step beyond, of course, those expenses, you do have locations or you do have availability, right? Do you have two locations that are?
We have two locations. We have Citrus Heights and Roseville. And
No. Don't you have locations that are remote this year?
We have one in Missouri, and we utilize a Regis office there. Ellie's over in Ohio, and I believe she uses a WeWork place. And I know it's not a Regis. So, and she loves going there because they give her donuts and beer. And
look at who she is, millennial, right? A millennial is only going to go to WeWork, so don't worry.
So Ellie said, "Stop shaming Tiani." So now we're shaming Ellie.
Mean adults. All right. So after we've worked this out, we've worked out both the pricing and the practice. We've worked out we want you. We understand what we're going to assume and not assume. So the next issue is software and other contracts.
Yes.
That we may have to assume or may need.
And this occurred with the Citrus. This is going on with the Citrus Heights acquisition, right? So they were actually more advanced technology in usage than we are, but there's also a large cost to that. So right now we're in the process of evaluating which software applications we're going to be using, and of theirs, which ones of ours that we're going to be using, and then get to a one firm vision of what we're going to be using going forward. So we're working on that, and it's a large expense. Software is extremely expensive. So, of course, when it comes to the tax software, it's always going to be the ultra expensive. So that's not going to be.
Yeah, that's my code name for ultra tax. But let's speak about that. So depending on the timing of a practice, you buy a practice that's running another product,
mm-hmm.
and it's November, December. Are you going to switch and convert?
Yes.
You are anyway.
We did that when we bought the Citrus Heights one. We did a soft, acquisition last August, September, and we worked with them to do a trial work to see how we're going to work together because the owner was staying on through January, and then decide whether the purchase was going through. And so we used their Pro Connect, which is like Pro Series, but not even close. So we worked with that, and in the process, all new clients coming in as of the current year was UltraTax. So we had the stuff converted. That took forever. So we had staff for the clients that already made appointments enter the basic information into UltraTax manually.
Hey, so there's one comment, Fred, that I think we covered, but are you continuing business at quote unquote their location, or are you bringing the clients into your existing office? And I think you said it depends, right?
Yes.
Right.
What happens? It doesn't mean the work's done at the office. The office is a receiving area. So we have our centralized office back in Cobblestone, New York, and we have remoters throughout the United States. All right, so we've got that process. So when the stuff comes in, and if it's not a return that's going to be a sit down with me or another, interviewer and getting it walked out the door that day, because we do some like that in the beginning of the year. It's not one of those. It's just we're receiving, going over it, and then it gets put into the pipeline, and then the admin staff dole it out to the different tax preparers based on their availability. So the offices are really for pickups and drop-offs, interviews, and kind of a feel-good presence, so they know they're around the block, because some people just like that.
That was block small b, right? You didn't mean to make a pun?
I did not. I don't even think about the blocks.
So I used to own blocks, for those of you who don't know, so I feel it's okay to make the occasional joke. And I made a very nice living for a very long time, so I can't even complain. It's a different, it's less a practice and more a business, and it's a business about doing tax returns.
It's a commodity practice. You're just pumping things out.
You know what? That was one of the things. It wasn't a practice, right? Because it wasn't as much. I mean, it's still a relationship, but it was more a transactional based relationship, and it was, as you said, in and out.
And one thing that I want to stress is, with each acquisition, we're learning different things. So we started out and said, hey, we got to do things differently, and then we bought another one, and then hey, we got to change a few things how we do. So we're always evaluating how we buy practices and what we do. And one of the things that we've learned from the last couple is that, I think, from the sellers' letters that they send to the clients, I think we need to send more than one letter and work with the seller to write that. Because one of the things that happens when you sell a practice or you buy a practice, a lot of people are loyal to their tax people, like we're loyal to our hairdressers, like we're loyal to certain people. And when that person is selling, they may go to Johnny down the block, because Johnny down the block's been bugging them for years, but they didn't go because they're loyal. You're not going to prevent that guy from leaving. But what we found out is a lot of people are going, well, I need a new tax guy anyhow, so I'm looking for a new one.
This, it's funny. Without mentioning names, someone we both know bought a large practice from someone who had died. And one of the suggestions I had said was, you're not going to be able to do all those returns yourself with your existing business. Bring on new preparers this year. Well, why would I do that? The clients need to know me. Yeah, but then if you wait till year 2 of your ownership to start having someone else do the return, they've now had 3 different people in 3 years. Mm-hmm. So I think you're correct that if they were looking to go, they had a loyalty to you, you've done it. Let's say the seller's done a poor job or a less than good job. They've gotten older, they've gotten disillusioned with the tax business. So their service isn't what it used to be or what built the business. So now, oh man, he's gone, so I don't feel guilty going.
Right.
So then boom, out you go. Now
and I do one of the things we do though with that, John, is a lot of the times they look to us for referrals to all our different people, financial planners, estate planners, lawyers. So one of the things that we're going to be requiring asking future sellers to do is to put a paragraph in stating that, listen, you come to me and you ask me for professional referrals because you trust me. Okay, I want you to know that I chose them, and I want you to look at this as another professional referral. We've never had them actually say that in the past letters. And so what happens is we'll call clients who didn't come, and they'll say, well, I'm going to go somewhere else because of this. And we're good at talking them back into staying because we use that. Listen, you trust the old guy. He told you to trust me, so why don't you trust me?
So you are calling the new clients?
We send multiple letters out.
Yeah, but you know what? Marketing. I mean, you do this, and the same thing with doing returns, with back and forth with email. I mean, granted, millennials today, they like you to text them and they get back to you quicker than the email, but nothing says important than picking up the phone.
Mm-hmm.
And I'm just a thought, getting people on the phone. All right, so we're going to do this deal. So we've talked about the location, we've talked about the software, we've talked about the costs and the commitments, and of course, we won't go into it today, but we could probably do a whole hour on IT issues, right? Because you're integrating something else into your IT platform. But how about people? So what, in other words, I'm buying your practice. We've now dealt with all those other issues. How is the work going to get done? You had people, presumably, right? It's not just a one-person shop. If it's a one-person shop, obviously either the seller is working for you or they're retiring. But if they have staff, what do we do next?
With staff, we want to integrate their staff in with us, obviously, if they want to. So when we look to buy a practice, I talked about the soft opening with Citrus Heights. We prefer that because it allows us to get to know the staff and see whether the staff's going to stay on after January and if they want to. It also allows us an easier time to not only mail the clients, but to actually call the clients. All right. And you do want to call the bigger clients. You want to call and talk to the business clients and encourage them to come in and meet with you before tax season even starts so they can do the interview process. And that happened to me at both the Roseville location and at the Citrus Heights location. They were both done before tax season. And so a lot of the bigger clients came in to, hey, see whether they like Team BQ or not. So employees, would integrate them all in and let them handle the clients they want and learn what they do and what they don't do, and then bring them on, in full to Team BQ.
Okay, no commercials here, but Dairy Queen? No, Berry Queen. So when we start looking at employees, do you look at any statistics? Do you look at anything they've done, or you just interview folks and make a hire-fire decision? Or do you?
Well, we talk to the owner. So,
okay.
So we have talks with the owner at length about their strengths and the weaknesses. And we go over that, and we haven't ever had a situation where the owner says, yeah, you don't want this person, I was going to get rid of them. So I've never experienced that. And so far, the three times where it's came employees, the only times the employees that have ever left was because they've left on their own. They've moved away or did something, but we've successfully integrated, 100% of our employees for a while now. So,
do you worry about whether the employees are on a contract?
If they're tax preparers, yes.
Before you buy, right? You want to know if they're on a contract?
Yes. If there's a contract, we need to know about that because you don't want to be stuck to a contract.
Well, the other way around, if they're not on a contract, do you care?
Yes and no. It depends on who that employee is. If they're a bit player, you don't really care. But if they're doing 75% of the tax returns, you want to know, because if they leave, they're going to take, half of that 75%.
I'm aware of, sadly, some bad things that have happened to people. I'm aware of someone sold a practice. The widow sold a practice, and no one knew that she was actually also a preparer. So she went and competed the next year, right? Everything had been in the decedent's name.
Mm-hmm.
I'm aware of one where the guy lost the business. So an acquirer bought it he lost his license. So the acquirer bought it for a song. Turned out the staff had copies of the database and hadn't signed employment agreements. So off they went to be a competitor. So there's some bad stuff out there if you don't ask these questions. And let's face it, you're not a charity here. You're a business and you're spending your money.
Yes. And it's a different scenario if you're buying to add on to an existing practice, as opposed to if you're buying a practice to provide a living for yourself. So if it's your first thing and you're going to leave your job and you're going to buy this practice, and so now you're relying on this income as a way to live, and something like this happens, you're destroyed. Where if it's in my situation where if I'm going to buy a $300,000 practice and 50% walks out the door, well, I still got a $150,000 practice, and that's all I'm paying for because that's how I structure my deals. So I'm not hurt.
So before you get to that, right, we're going to put up a poll question real quick. But I've heard bad stories and I've heard horror stories. And you know what every horror story is? When I get to the point where like they're competing with them, or they gave away part of the business to a cousin or all this crazy stuff, I say, okay, stop paying them. And do you know what the next statement the person makes to me is? I paid them off. I took a mortgage on my house. I got an SBA loan. My parents loaned me the money, and they paid the person in full. Never, ever, never. At least you want to pay them in full at the end of the first tax season. See how it goes. You know.
And there should be something in escrow. There should be some of that should be held with the lawyers, and they don't get it until then.
100%, right? 100%. Something has to go into escrow.
Mm-hmm.
So we put up this poll. So after you were already in practice, did you ever purchase a practice? I did. I didn't. I've talked to sellers, but I haven't done a deal. You don't need to answer this, but if you're not if you want credit either for NAEA or for CPA purposes, we'll issue you a certificate. You've got to answer 2 questions for me. So,
speaking of contracts, a couple things you wish to look for when including in the contract. All right, you want the phone number, you want the website, and you want their fax number. All right, because you want to take their website and you wish to redirect it to your website. All right. Plus, you don't want them going off and starting a new business and using their website.
I also want their cell phone number, because a lot of people text and use their cell phone for whatever reason. I wouldn't, but they do. So I'd want their cell phone number, and I would want their personal email address. Again, people send, well, first of all, I know plenty of people that have a nice website and have Fred Stein CPA at gmail.com. Well, gee, I need that email. You can go get yourself a new free personal email, and I'm probably going to drop that bomb right there at the closing table and say, let's sign that over to me right now. Well, I don't want you emailing everybody. Stop sending me stuff here.
That's a good thing. I think that might be tough. I think you might get a lot of pushback, but those are definitely good things to do, and I'm going to add them to the next contract we do, and we'll see what happens.
Excellent. So let me just publish this. 40% of you have already done an acquisition. 47% have not. 14% of you have talked to people but not done a deal, which I think is interesting.
Yeah.
As you said, getting the stuff transferred at contract time or immediately after is a very big thing, because I did a failed purchase acquisition a couple of years ago, and one of the biggest problems we had in that was getting the seller to actually transfer ownership over to us. And that's when we knew there was breach of contract. That's when we basically pulled the plug on that and walked away after 2, maybe 3 weeks of attempting to do that.
You have the second worst horror story of anybody I know.
Mm-hmm.
All right. So, and there's 2 people tied for the worst horror story ahead of you, but which both were, I paid off the business and the seller did something really evil after that. So you need to be careful, and you need to have some sort of money holdback, however you work that out. So a couple of thoughts before we move past this, just to talk about things that affect valuation before we talk about how to price the return. So, first, in one practice I'm aware of, they never had a Form 8283 signed ever, and this guy did no due diligence. So the buyer did due diligence, and he had a great deal of pushback. Now, Tiani is Fred's partner. I think I can say that in the business. So she's actually been sending me things to make sure that you stay on point. And one of the things she mentioned is apparently you've had an issue with driver's license pushback.
Missouri people do not want to give up driver licenses.
They're from the show me state.
And you don't want to show you the driver.
And of course, engagement letters. I think it's funny. I think that's a common issue everywhere. But Block was using engagement letters, not putting down anybody, right? But they were calling it a service agreement. And that was like back when I left. That was 15, 17 years ago. So, it depends how you present it and how you sell it. But that's a non-starter, right? You've got to get a signed document from people.
Yeah. And when we evaluate, and this is the stuff we learned from this last batch, is within our talking points or the buyer perspective, we talk about what level of due diligence our client's accustomed to. So this is going to be conversations we're having with the seller. We want to know what the seller did and what they did, because if they did none, well, we require due diligence. We're not going to put stuff out there without doing what we're supposed to do. So if they have no due diligence whatsoever, then the value of that purchase has gone down, because when we buy it and we do it, we're going to do the due diligence and we're going to lose a lot of people.
Well, so the point I was going to say is so at this point, if I were buying a practice at this point, I want to start looking at returns. And I mean, for me, I would, depending on the size, I would ask for the 10 most expensive returns, the 10 returns the guy thinks are the quote unquote hardest, right? Complex isn't fair. What's your 10 hard ones, dude? And then 10 random ones. And I would want the random ones probably to be, it's gotten easier, right? My previous response would have been an EITC return, so I can look at documentation. But now it's almost any return has that level of due diligence, right? Anything with a credit. So,
and I'm going to look at least 10% of the returns. So if I'm buying,
really,
I might want to, because if you buy a 300 return practice, that's just 30. What you said.
You're correct, but the other way around, 2,000 return practice.
Well, then maybe not a full 10%, but yeah.
Right. Yep. But I also like putting the onus on the seller, because if they give me what they think of the 10 hardest and the 10 priciest, in theory, those are the ones they gave a crap about when they did them. So, and it also show you what research they can do or how they can apply things, because you always learn some really interesting stuff when you look at other people's work.
Yes, and you want to see the backup documentation. You don't want to just see the tax returns. You want to see how those tax returns were put together. You want to see whether their backup documentation, where it's easy to go from what they were given to the tax return numbers. And if you've got to basically recreate it because it's not done, that becomes an issue.
Well, and Tiani made that comment too about retainage.
Yes.
Is that and I think you said it a few minutes ago. What happens to your retainage if, without passing judgment on anyone, if you're following the rules differently, or your interpretation of due diligence, document retention is different from someone else's? Now, there was a comment earlier up the chat stream where someone said that they bought a practice of mostly senior citizens and they didn't want to e-file. Well, that becomes an interesting thing too. Do you get around that by saying, hey, can I see your 8879 records, right, that they're supposed to retain, and get a feeling for that? And speaking of which, Fred, how do you deal with mistakes?
What do you mean by mistakes?
Well, I mean, my returns are pretty perfect, but that's because I do 20, and it's people that have been here a long time, and 10 of them have the same last name as me. But seriously, when I was a block person, I used to want to get we paid penalty and interest on our errors, and that was advertised, right? So I was always looking to get that number to 0, and we did too much. And penalty and interest is probably an expense to be controlled, not a problem to be eliminated, sadly. So that being said, if your predecessor has errors, how are you dealing with that?
Well, we're doing that. If we see errors while we're doing the returns or in the due diligence process, if we see a lot of errors in the due diligence process, we're probably going to back away.
Right.
We're not going to want to buy that practice because unless these are minor errors and then we can fix or do something to. But that's a big red flag. If they don't care and they're not doing due diligence, and there's a lot of mistakes, then you have to evaluate: am I in it just for the money, or do I care about what goes out with my name on it? And we care about what goes out. We don't like mistakes. We have 2 levels of reviews for our returns for 90% of our returns. Okay. We have a technical reviewer that goes through and does all that, checks the data entry over, and then it comes to me for a final review. So we catch a lot of mistakes. Some mistakes, everybody's gonna have mistakes. You're gonna do something. It's how you handle that mistakes and how you back up those mistakes that matter. But if it's from the other person selling to you, if they're just mistakes as we go through and find them, we're going to do what we're supposed to do. We're going to contact the client. We're going to talk to the seller first and say, hey, do you want to talk to this person about the mistake you made, or do you want us to do that if they're still involved? But yeah.
Scott's got a question that'll become a good talking point for a minute. What is your pulse check, if any, to determine if you really want to start doing the research for an acquisition? So before you answer, I think, Scott, I think every possible acquisition is worth at least asking the basic questions. Short of it being a guy, or I shouldn't be sexist, short of it being a practice that has a reputation that you're like, oh my gosh, they're the single source of my new clients in the last 2 years, right? Short of that, I think you want to look at all of them. But Fred, is there anything like immediate red flag that you don't even go past the first interview?
A lot of times, you know, you have that conversation with people, and you need to have that gut feeling as well. You know, if right away the person appears shady, you don't like them, it doesn't make sense to even go any further. But as John said, pretty much any deal is worth looking at, you know, unless of course, you know, if you're a small $250,000 practice, and that's not a small practice, if you're making good money, and now you're looking to buy $1 million practice, well, then you need to pause to see whether the logistics work. All right. Because the logistics.
Let me dial that back for a minute. If somebody's doing 250, that's a pretty good practice,
Yeah.
and I think they, unless they're running a crap show, which our colleagues are not, they'll be able to build a platform to do it. But let's go backwards. I'm a $70,000 guy.
Yes.
It's just me and an assistant, me and a seasonal person, and now we're going to go and buy something bigger. That's an issue, because in reality, it's a reverse merger. It might make more sense, at least at the beginning, to put your stuff into theirs and make your culture their culture, your culture, and run it. But go on. So we're assuming that you're a bigger operator. You're already established your own policy and procedures, and it's a merger of equals, or you buying something smaller.
Okay. So if it's a merger of equals and buying something smaller, before you do this, and you're going to come to a lot of, especially if this is your first time, you're going to find a lot of pressure points where things may not work perfectly. And one of the biggest things that you need to invest in first is making sure you have the infrastructure ready to handle anything that you're coming in. And by infrastructure, I mean both technology and both the admin staff, because the prep side is easy. All right. You can usually find preparers, but finding proper admin to handle all the back stuff that has to be handled, unless you're going to do it yourself and you want to do that kind of work, that's fine. But if you're going to grow, you need to have the proper staff handling the different areas. And if you don't have a good admin staff, you're bound to make a lot of mistakes and have a lot of grief and headaches during this process.
Awesome. Okay. Okay. So one last thing, and then and then we'll move beyond. We'll start talking about pricing and how some of this really works. So another comment of Tiani's is, what does the seller consider a kid return to be? Now, I'm guilty of this myself, of not having a firm definition of when a firm-wide, this is when they can stop paying $50 for their one W-2 return as a courtesy, and here's where they've got to pay the $220 office minimum, right? The difference between, I might be 20, there's the 23-year-old who's halfway through college because they're having some difficulties getting their act together. Then there's the 23-year-old who makes $150,000 a year as a union welder, right? Mm-hmm. Those and has a home and more money in his 401k than I do. So age isn't the driver of who is a dependent return, at least anymore.
For us, if they're a dependent on the parent's return, that's the dependent return. If they're not, they're an adult.
Got it.
They don't believe it. So we had an issue today where, it's a 19-year-old kid, but they graduated, they work in the real world, and they made, $25,000 this year. And he didn't get the $75 dependent return price, and he's having a conniption, but he's not a dependent. So,
who's having the conniption, the parent or the kid?
The kid.
Okay. One of the things we try to do, this is not about buying a practice, but once the kid is 16 and we're doing a return, we do a lot of work through texting. I use Textalent, and we text kids. We text everybody, right? But young people that I think would prefer texting, and this is probably a terrible statement of me to make, I will text them and say, hey, we just emailed, I'm the accountant, I'm your parents know me, whatever. I just emailed you something. And then we text or we email, but we bring them into the relationship so they feel like we're the advisor from when they, I probably wouldn't do that with a 12-year-old, right? But once they're like a junior in high school, we do. And you know what? A lot of them deal with us. And I got to tell you, they do a better job with the portal than their parents, because some of them send me back a signed return before the email's even out, right? Where, as you're uploading the document. So anyway, I think that helps solidify it. And then of course, that's on you to have a communication that, by the way, this is your mom and dad's dependent price. And, once they graduate, we give them the warning, hey, you're going to be paying real world prices next year.
We do it. We give them welcome to the adult world discount. So we'll usually do 50% off for the tax return. Say, hey, you're an adult now. You get 50% off. It's kind of saying, hey, next year, this is your price.
Okay. Interesting question from Gigi, from Jerry. For valuation purposes, does the entity structure matter? Would a Schedule C be less than a corp?
Not really, because we're buying the clients. We're not buying the entity.
Yep. I mean, I guess if there was, if there was some substantial amount of assets or a lease that was in the corporate name, maybe, right? But I prefer not to buy anybody else's entity and have their headaches and their problems. That's on them. So going back, though, just dial back for a minute to problems. We didn't circle that up. So what are you doing? Let's say there's a couple of, make it $1,000 worth of interest and penalty that you paid. Mostly interest. You get the penalties abated. Are you getting compensated from that somehow in the first 2 or 3, especially if it's for returns you didn't prepare?
Year's returns?
Prior year returns, yeah, that you didn't prepare.
Prior year returns are the problems of the prior year preparer, and that will be in the contract. It states that going forward as of such and such date, we're responsible for this stuff. If there are any issues, that's a them issue, and we're going to direct it to them. Obviously, if they're nowhere to be found or whatnot, and we have to make good on it, we're probably going to. We haven't encountered that issue. I haven't encountered the issue where there were problems with the prior return, and I emailed the Roseville seller, and he's handled them. He's still in practice. He moved to Texas, and he's in practice down in Texas. So we've had problems where a return needs to be amended or something had to happen. And I'm going to listen, hey, Todd, we got an issue with client XYZ. And he says, yep, send me the stuff. I'll fix it. And he makes good on it.
Now, he spends his time and does it on your system?
No, because he's got their old stuff on his better tax software.
Fred.
I didn't name it.
You didn't make him delete all of his stuff?
Yeah. Because he's going to sell me more in another couple of years. He's kept a lot of his corporations.
Okay.
He has all his stuff there.
All right. No, I make him delete stuff. If it wasn't for the cloud, we used to take the server. I mean to the point that you want, oh, that's my computer. Give me the computer.
Stop. Well, I did buy his computer. So I did buy his computers, but he had his with all his stuff on there. And it depends on the business too. This is a person who's in his mid-60s who I know he's not going out there to compete against me.
Oh, fair enough. Okay. Hang on. Poor Mary. Okay.
I didn't mention it.
Anyway, so, okay. So that's interesting. And then if there's any interest to pay or a penalty to get abated, that's on him too.
Yes. And he's taking care of it. Yeah. So we expect it, and it's written in there. And, if we were still making payments and there was a penalty, something that had to be paid, we would subtract that from payments and consider that a payment. Again, we've never experienced this.
Now, I was gonna actually go with the opposite. I was gonna say that to make the world feel better, I would have to make the client feel better. I would have cut the check immediately, especially if it's under probably $250, right? I would have probably cut the check, and probably we'd want to amend the returns, but that's just me, and push it out the door. And I really thought you were going to tell me that Todd was logging into your system.
No.
Well, I'm just saying. Well, you're so friendly with the guy, amending the return for you and then going through your normal process so you could control it, including the delivery. But got it.
And again, it's going to depend on, who you buy from and the level of, I guess, respect or trust that you have in the seller that you're going to build over that first year or two. So, and with any penalty notice that we get, whether we do it or somebody else does it, we don't write a check right away. We say, hey, we're going to write a letter. We're going to fix it based on what the scenario calls for. So we got to find out was it a them issue, was it an us issue, or was it one of those IRS issues where it just happens?
Right. Okay. Like I said, it's just interesting ways to handle it. I do think that contractually, you want to make sure that it's covered. So Jan says, is there insurance you can request the seller maintain so much time past the sale? Sure. Most of these policies, just to be fun, are a claims made policy. I had to have insurance at the time the error occurred, and I still have to have it at the time that the claim is reported. Now, there's something called a tail. So if the seller was retiring, they can pay for a tail for 50 or 75% of the policy cost. I would probably want them to do that. I don't know that Fred would, but that would be on their E&O policy. Sadly, so let's talk about this, Fred. Have you encountered sellers who don't have insurance?
I've encountered tax practitioners that haven't had insurance before.
Right.
I haven't encountered any sellers that haven't had it.
Oh, okay. I've encountered people that don't have it, and I want to run. I've encountered people that don't have cyber today. That wouldn't be an end deal for me because we're going to migrate it to my server. But that does tell me something about people's either knowledge about what goes on or that they don't care. They'll regress.
And it depends whether you're buying from an older individual or a younger individual. A lot of the older individual, not a lot.
There's no ransomware if you're over 65, Fred?
Exactly. So, but there are, a lot of them, like, they take the attitude like, I'm retiring anyhow, so I'll do what I want. And you see a lot more fluff or issues in some of the returns at times.
Right. All right. So I hope that answers your question, Jan. I'm a big fan of insurance, and yes, you want to make sure they continue it and put that into the price. All right. So the last part is, of course, if we're buying the one-person firm where that person was the year-round person, how are the clients going to handle being acquired by Humongo Corp? Because even if they understand that Fred, you and Tiani own a firm, they may not always get to talk to the two of you. Or worse, I've had situations where someone calls, I says, hi, how are you? Oh, I have this blah, 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 blah. And, the conversation becomes, okay, look, I know who you are. That doesn't mean I've ever looked at your tax return. And then, you drill down and you help them. But folks need to get used to that you're not the person that's handling their entire thing. And in your opinion, does that affect retainage and other happiness or?
It depends. And it's funny because our base is in New York. So every place that we have clients that are not from New York, think we're New York City. And then we got to let them know, no, we're from Cowtown, Cobleskill. We got, and then they're like, oh, I like you better now. So we had that pushback, and it's a matter of educating the client. Say, listen, we have a team approach here that by having different people that are good at different things, we can bring more value to you than it's just, Jane Doe over here that does everything and is stretched in 17 different
directions. Little bit of everything and no direct expertise. I agree.
And I let them know that, yes, it's everything does flow through me. So even I'm not going to do the return. You're going to have, Ellie over here, Richard in Texas, Kathy in Louisiana. They're going to do it, and they're all very people.
That's the one advantage, by the way, of a dispersed remote workforce is doing those state returns. Because even if I did the federal, if there's a Missouri issue and you're in California, maybe you push it off. Let them do the state or at least review it for you. Yeah. All right, so we've gone through this. We're going to do this deal. Let's talk money, Fred. So there's really two different divergence. There's a divergence here. The seller's going to stay, and the seller's not going to stay on how the sales work. So we did say this would be an hour. Let me put up the second polling question so that if anybody that's been here since the beginning needs to go, they can go, and then watch the replay later. So based on today's discussion, I would never buy a practice. I'm ready to buy now. I want to buy a practice, but I need to work on my systems. You scared a couple of people, Fred.
I do that a lot.
Oh man. Too funny. I think that's it. So we're gonna close that up in just a second. If everybody else can get ready for me. 7 of you need to answer, and then I can we can move on. Okay, I'm going to close it up. Okay, so we're ready to do the deal, Fred. What does that look like?
Well, each deal, we have a standard package that we utilize. And of course, when we say standard, that doesn't mean things don't change and alter based on, what kind of deals you negotiate with the seller. We tend to put between 5 and 10% down on the total value of the firm. And the way we buy a firm is we're going to offer essentially 100% of 1 year's revenues. A lot of people can tell you you're going to buy between 75% and 125%, with the brokers telling you can get 175%. No, you have to be a gold mine of a firm to pay 125%, where your fees are basically double what mine are. Because it has to be worth it to do that. But we're going to go with 100% as our talking point. And what we usually do is we structure that payout over 3 to 4 years. And keep in mind that the payout percentages can be different than the retainage calculation percentages. They don't need to be the same. All right. So I'm going to talk about a 4-year payout where we basically
So wait, Fred, let's back up for a second. Let's talk about retainage for a minute, right? So what we're saying with retainage is, in order for you to earn full price, X% of the clients need to become our clients. Right? That does or doesn't appear in every contract.
No. And so some contracts will have floors in them, and I won't ever do a floor contract ever again. Basically, a floor in a contract means, you're paying me at least 80% of the value of my practice, no matter what. All right. So what happens if you lose 50% of the clients because they lied to you, whatever? They have that retainage, that floor in there. You could get stuck. So I personally won't ever do a floor contract. What that means to me is that, the seller has to be on board, and they want to work together with us to want to make sure that retainage is a good, that they're going to help with the transition, that they're going to encourage the clients to stay with us, and they're going to facilitate that transition. So the more clients that stay with us, the more the seller's going to get, because I'm only going to pay for clients that I get and clients that I keep.
Okay, so then now our next step is we're going to talk about how money works. So the seller does not come to work for you. You're going to give them 5 to 10% of the first year's sales as a deposit.
Mm-hmm.
And then when do I get more money?
All right. Traditional sales usually pay them out at the end of each tax season. The way that we do it in-house is at least once a month. Tiani tallies up the money we've collected. So we're going to pay 25% of revenue that we collect, and we're going to pay that out for 4 years. So all revenue we collect, the seller gets 25% of. That initial deposit, let's say it's 10%. It's not a deposit. It's a prepayment for over the 4 years. So let's say it was $10,000, $100,000 practice. $2,500 of that is the first year's prepayment. So the first $2,500 that they earn for the first year, they don't get paid. So $2,501 is when they first start receiving money. So they get 25% of, whoever comes in that year one.
Now, what happens if your fees go up 10% in year 2?
We don't pay an interest rate. We raise our fees every single year. So we have an interest factor built into that. So this $300 client in year one is now $320 in year 2. Well, they get 25% of that $320 in year 2. So that incorporates their interest rate.
What if the complexity of that return changes and the $300 return becomes an $800 return?
They get 25% of that $800.
Because they saw, all right, very good.
We want to keep it simple. We could track it and say, hey, these are the clients as long as they stay here. And some do that. This is a $300 client now. It's still a $300 client at the end of the thing. But now we got to track that and pay things out. And there's more complications.
Let me add one thing here. So another way that practices get sold is going back to the percentage of income method. We agree on a price. So let's say it's going to be 100, back to your $100,000 sale price. We agree I'm going to pay you $100,000, provided 90% of the client's return. So on May 1st, we take a look at what percentage came in. 90% came in. So I'm going to pay you 25. I'm going to pay, so if it's a 4-year note, I'm going to pay you $25,000 on that $100,000 purchase price. No percentage, no worrying about the fees going up and going down. That's not an earnout, so you would have to put interest into it, right? As a note, right? Yours is an earnout, and you don't have to worry about minimum interest rates. Okay, so now dial it back, Fred. In your example, the seller goes to work for you. There's no employees. It's just one guy who generated $100,000 from his little rented office space, and he wants to come to work for you. How do you compensate him versus the earnout he's getting?
All right. What we do, depending on the level of experience of the seller, because not all sellers are super experienced. So we're going to pay that seller a commission rate as well. So they're going to get between 20 and 30% of the tax returns that they do work on. So whether they do their tax returns or maybe they do some, of our tax returns, they're going to get a commission rate of between 20 and 30%, which we've figured out is pretty valuable to our remoters. So it's a very fair price. So they're going to get paid that commission, and then they're going to get paid their 25% earnout. So they can get between 45 and 55% of that tax return. So Kenneth also mentioned what happens. Let's say we have an $800 return that now becomes a $300 return. The opposite happens. They get paid on the 300, not the 800. So it works both ways.
Now, Ken, for what it's worth, when my clients had stopped itemizing, I didn't lower their prices. But that's just me.
And Ken's talking in today's environment that a lot of these Schedule Cs and small businesses are because of the virus. Well, that is part of the issue in today's time, because that practice isn't as valuable as it was before the coronavirus, possibly. If they have clients that they, sometimes it's not the practitioner's fault, but if their clients aren't positioned in a place to survive this, then that's a less valuable practice to buy. So,
well, hey, let's plug in a couple of issues that we were talking about before we started about virus-related issues. Some of these issues are things we're thinking about that I don't know how we're going to deal with it yet. There could be people that are motivated to sell because of the virus. This is my opinion. This is I think 30 years I've done tax returns. If I started in 1987, but it's the most challenging year there is that I've had.
And we thought last year was.
What?
We thought last year was.
Well, I thought Superstorm Sandy year was challenging too. This is the most challenging year. So if somebody's motivated to sell because of it, you have to look at some of the things they've done. So first of all, what did they do after April 15th? Did they just close up the place and disappear? I'd be looking at multi-year numbers. What were your 3-year ago numbers? What were your 2-year ago numbers? And what were your this year numbers? And we didn't mention it yet, Fred. Is there a way to verify if somebody's kind of true on their tax return numbers?
Yeah. Get the 4506.
Oh, maybe, but there's another way. Most people have to do what? these days with their tax returns. They must
File.
e-file.
E-file, yes.
So can I get your e-file numbers under a FOIA request?
You can track all that stuff, right?
Yeah, I can get your numbers, how many returns you e-filed. So I can look at your 3-year trailing numbers, and I can have to ask you, Fred, why did you do 500 last year and 350 this year?
Mm-hmm.
Well, because I closed up April 15th like every year. I want to look at the damage they did to their practice this year. How did they handle COVID-19 issues? Right.
Yeah, so what correspondence they had with their clients? What kind of what work did they do with them?
Well, did they have clients who are technology averse, or is the seller technology averse? Right, and there's no portal.
And that's some of the stuff we look at during our due diligence aspect of buying a return. Is we want to look at all of those things, regardless of whether we're in a pandemic times. So that's just more important now than in the past.
Got it. What if, like you and me, we haven't normally, if somebody comes into me when the date starts with April and they're a new client, about the best I'll give them is 15 minutes to help file their extension and set their appointment for a date that starts with May.
Is this before or after we laugh at them?
I laugh after I get the down payment. But well, no, I only laugh at the people that come in April and with their new S corp and want to make sure I'm going to file it without an extension.
Mm-hmm.
And I tell them certainly. But I've been taking all comers this year. They seem nice. They want to pay the fee. So the concern is, are these 1-year wonders? You know, they either their guy disappeared, their guy is a mail away, or there was some sort of problem and we're local, or I had a portal and their guy doesn't, so we did the return. But I would be leery. I would be looking at how many, and I know you kind of do this already, but I would be looking especially at 2019 returns, you know, but paying. So if I'm paying on a percentage, as Fred suggests, it doesn't matter. But if I've got a flat fee and I'm going to pay with a retainage, it probably does matter because a lot of these people are not going to come back. They were a 1-year wonder.
Let me jump in here a minute, John. When you talk about the retainage aspect, when you talk about the way John was saying to buy it, where here's the set price and what we're paying based on retainage, year 1 should be your lowest retainage number. So because most people will stay year 1 and then go someplace else. They're going to stay year 1 because they were surprised they didn't know a new person was doing it, and they just in getting it done, and they say, the heck with this, we're going someplace else. Or they're going to try you out and there's a personality conflict or whatnot, and they're going to go somewhere else as well. So if you're going to do retainage, I would not pay more than 20% retainage for year 1 in that regards, and then bump up year 2 and year 3 to compensate for that.
Got it. Good idea. Okay, so the last thing is looking at financials, right? I mean, do you put much emphasis on their financials, Fred, when you're buying?
I do, because we've been taking over locations, so we need to evaluate the extras that we're gonna have to pay for. So we're not only paying for clients. So now, if there's staff, we have to pay for staff, and we haven't evaluated the staff yet to see how competent they are. So are we paying staff to sit there? What are we doing? What are their expectations? We have a lease. We have utilities. We have all of that, all of those factors.
Okay. And then we talked earlier in the conversation about the ability to move or not move a practice, what makes the most sense. So that's got to get factored in as well.
Yes.
So,
so somebody asked what retainage is to the purchase price. Keith, the purchase price is the purchase price, and that's what you offer to pay. That purchase price gets adjusted downwards based on the clients that you retain. So if theoretically, if you've only retained 80% of the clients, then that initial purchase price of $100,000, you probably wind up paying about $80,000 for instead of the 100, because you're paying a retainage factor. I build that into my earnout factor, where I just pay for what I keep. It essentially does almost the same thing, but it's just easier for us.
What are you doing contractually for the guy who does not want to work for you?
Okay, so the seller that doesn't
Right.
want to work with me, we will put into the contract that they must be available to answer client questions for us. So when we have that client, we don't know the situation, they must provide us a certain number of hours in that first year that they're willing to answer questions for us, and that's part of the purchase price. We haven't had an issue where somebody's wanted to just sell and then take off. We've always had some kind of an affiliation with that person, and this is in I think almost year 3 now. And while I don't have to often call Todd from the Roseville sale, I still can, and I can still email him about questions if I find something peculiar in a client or there's some history that I need to get from him.
How about a sale though, where the guy says, "I'm retiring, I'm moving, I'm downsizing," and then he competes with you?
Well, that's an issue.
What are you doing anything contractually to try and preclude that? All right.
Well, we non-compete agreements are very difficult to enforce, and we don't do a non-compete. We do a non-solicit, which means that the clients they sell to us belong to us, and that if they wind up doing those clients, well, guess what? They just bought them from me. So it's basically a buyback provision in there. So if we do a client for 2 years and then he starts to open up shop and he's calling that client and he wants to do their return, well, he owes me the money I paid him. He has to pay me that 25% a year for 2 years to get my money back.
Got it. Okay.
Luckily, this is not what we've encountered yet.
And you are correct. There is no, there really, in most states, it's almost impossible to stop a non-compete. Although, I don't think mileage matters anymore, but most states will allow 25 miles. But certainly the anti-solicitation is the, and you
uses 50.
I'm sorry?
H&R Block uses 50.
In a lot of, Block, for contracts where they can do things, they will do that. Now, when I sold, I had a 50-mile non-compete, even though New York is a 25-mile state. However, I was the sale of a business, not an employee departing. So pretty much we could agree to almost anything we agreed to.
Right.
So lucky me, I got to drive to Westchester County, which, that's a minutes, not miles commute. So, right. So Walter's saying, previous practitioners doing family and close friends about 30 to 50 returns. So Walter, what I would say to them is, I'll allow you to do that. Give me the list in advance or give me the list right now. And I'm going to assign you a desk. You're going to do it in my office. And that's what I would do.
Or it's carved out of the practice and you're not paying for them.
You know what? My very first employee, Fred, right, from poor lady died last summer in her late 90s. But my very first employee, when she wanted to stop doing taxes, she still wanted to come to class, so I let her. She wanted to do her own, and she had 6 brothers and sisters. So she wanted to do about 20 tax returns. So I said, well, as long as you don't do it right during peak when we're short of desks, call the office, schedule a seat, come on in and do them. She says, how much money do you want? I said, I don't want anything. Come on in and do them. Why? She's not buying software. People aren't bothering her at home. And I know exactly what she's doing, and it worked great for all of us. And when she stopped doing returns, guess what? They all converted to paying clients. So
we have that program with our remoters and our tax staff. If they got family and friends, they get a certain number that they get to do for free, and they got discounts they can give to family and friends to do them through us. And we even have, if they want to have their own small practice, eventually leave us, that doesn't bother us internally. We just want everything to be forced. Secret stuff would bother us. We don't want them to be doing things on their own and making plans to leave. So we make it as open as possible for them and communicate with them. And we even have programs which haven't been really utilized yet, where they can run their own little small practice through us.
So just back to that for a minute, Fred. That's why you run a FOIA request every year, and you make sure that they don't have an EFIN. Not for nothing.
That makes sense. See, that's the problem, Walter. You paid her all in full at that, but it's 70% value. That's not a bad purchase price.
I mean, I might do like Fred said, go back to her and not be unrealistic and say, look, I'll give you a one-time offer, 35% of what half of what I paid you, you're going to give me back for those returns, and everybody and put it in writing, because I would get her to give you, as part of that quote unquote settlement, a list of all those people
Mhm.
and say, so long as we agree, these are the only returns you're doing. But for 30 to 50 people, did she go and buy software? Or she, and all of a sudden it can get suspicious very quickly, right?
And now that's 200 people she's doing, and then they're poaching the old clients again.
Correct. And oh, you got to go to her. Oh, she used to be my preparer. Yeah. Yep. What else are you thinking, Fred?
We got the purchase price, we got retainage. The biggest part is due diligence.
Yep.
If you don't do your work up front, you are going to pay later. The thing that Walt is going through now. These are all
Right.
things that can be anticipated and should be written into the contract. See, it's written into mine. They sold them, they're doing them, they got to buy them back.
Hey, can we talk about the contract for a minute?
Yes.
I get questions all the time, especially for my engagement letter. Can I see your engagement letter? Can I have a copy of your engagement letter? And I always hate to do that. And I gave the letter to somebody a couple of us know. And 2 years after that, he said to me, thanks for nothing. I got sued in your town. Why did he get sued in my town? Because my engagement letter says that first we're going to go to arbitration. If arbitration doesn't work and you're going to sue me, you agree to sue at the time in Village of Goshen Court.
Well,
Now,
that's stupid.
It's called I didn't read anything. I just used your letter. So here's how you do a contract. I guess you can talk to other people about the terms they had in their contract. Talk to me, talk to Fred. But what you should do is only you know what you want. You should write down the terms that you like. And you should then take those terms to your attorney and say, here's what I agree and here's what I want. Legalize this, memorialize this, and they'll put it together for you. Don't use somebody else's agreement for a whole host of reasons. But, ask about what other people are doing. Don't use their contract. Use their ideas. Now, when you get to Fred's point, generally speaking, you can probably have a template contract. But let me ask you something. All of yours are based on New York law, California law, Sellers State. What are you doing?
We had a legal one drawn up for the Roseville office,
right?
And we paid, I think, $2,500 or $3,000 for it.
Right.
We paid, and they went over it, and it was a very good one. We modified that one, for both the Missouri and the Citrus Heights
one.
It's
based on what state's law? Your contract.
California law.
So when you do these other acquisitions, in order to use the template, you're basing it on California law as well.
And that everything has to be within the California law. And the Missouri one I wasn't too concerned about with that aspect, and the other one was within California, so that's okay. If we do another one, we're going to start with our contract, but we're going to utilize a lawyer again if it's in a different state. So
okay.
This is not my be all end all contract. All right. When we do another one, we will utilize an attorney again, have them either look at this one or see what they do. And, then we're going to have multiple templates. And
my point was going to be that, an issue is what state law controls. So you would not want to modify that California one and say, oh, they're in Missouri. Let's make it under Missouri law. And
right.
you have a number of problems, including the fact that contract might not be valid in Missouri, only valid in California.
Yes.
Or at least enforceable under California law. Yeah. So anyway, so Rayfan asked a question about asking age. Fred's template, or at least an easy version of Fred's template, it may not be the full official secret one, is in the handout section, right?
Yeah. We have a lot of John Smiths.
Yeah. The BQ practice purchase one, right? That's the one. So, what else did you want to talk about there, Fred?
Well, I think we covered everything. We are starting a new program out that we are offering consulting for anybody wishing to buy a tax practice, where you can get a half hour or 1 hour consultation with me, and we also have a package that we can put together to assist you if you're buying a practice. So you can email me, or John's going to put up a link for where you can go to request an appointment on a calendar. But my email is fred@bqtaxpro.com, and I'm more than willing to share a lot of stuff for free. But we are also, if you want a true consultant relationship, we can handle that for you as well. And John put the Calendly link down in the comments there.
Yeah, and there is a it should pop up when they go. What anything else that you wanted to cover? I think we're good, right?
I think we're good unless you remember something that I forgot to say.
Well, there's plenty of things you've forgotten to say over the years, Fred. I don't want to touch that one. Give me 30 seconds here, and then I think we're going to be. So give us a week on transcripts, please, and we will get those right out to you. If you don't hear from us, please email Nicole at taxpracticepro.com if you have an issue with a transcript or with a certificate. And Fred is fred at bqtaxpro.com. And we did have another one of these that we did with Debbie Snelling, and all of her handouts are in the and Fred's from last fall. So if you go to the Tax Practice Pro YouTube channel, by all means, you'd be able to see all of those documents. And let me just post that link too.
I do think that the download link is broken. I tried it earlier today.
And I just tried it before and I got it.
All right, well, see, I'm broken, I guess. And please, if you want to just email me and ask me simple questions, I don't mind giving a little bit of assistance, so feel free to definitely email me or find me on Facebook.
Now, if you have complex questions, Tioni at bqtaxpro.com.
Because we know who the boss is. Yes, it does, Mary, when you're selling.
Yep. Well, selling, yeah. I mean, selling, my advice would be 125 cents to the dollar, cash only. With God, we trust, all others pay cash.
Mary wants to sell before I just steal Nikki away. So that's the main thing.
Oh, got it. All right. So it's been a fabulous, guys. I appreciate everybody. And a Monday, very interesting not to be doing a Friday afternoon. If you're looking for more, we do have a COVID-19 event coming up. Another update webinar Friday. We're hoping that there's going to be some legislation Monday and Tuesday.
It might have already happened, right?
I haven't checked news this afternoon. It was supposed to be a Senate vote this afternoon, a House vote tomorrow, and then the president signing it as soon as possible. Mary says it didn't happen yet. So
no, she's not selling yet, is what she's saying.
Oh, she's not selling yet. Tim, you're welcome. And how's the little man? We haven't seen any pictures recently. And then Kim is updating, or Ellie is updating us that it's not happened yet.
Ellie on the block.
Ellie from the block, right? All right, everybody, have a great evening.
All right. So it's ended.